Hello, welcome back traders. This is a continuation of my previous video. In my last video, I broke down GJ, and in this video, I'm actually going to go over Euro USD and Euro GBP. So let's get started with Euro GBP. I'm currently bearish on this pair. I had broken down in my previous videos about my fundamental bias, my long-term approach, and longer-term targets that I had. And so price is succeeding to the downside as expected, and I do foresee price to go and tap a 0.83100 support. Before price does go down to that support and tap it, there will be areas of struggle. The current area of struggle I foresee to be broken today. There was a lot of accumulation the last 2 days of last week, as we can see. Sunday there was accumulation, and then there was Friday move, which was accumulation. Can't really see it if we zoom out, but when you zoom in, you can see the 2 days right here, accumulation and accumulation. So it didn't really move too much against narrative, only about 25 pips, but that did build a bullish bias for buy stops, and it whipsawed them towards the downside, and now we're going for the last stops in the day. If we go into the smaller time frame, we could actually see a better visual of this. We see that Sunday it did have a huge gap to the downside, and then it spiked back up in Asia and kind of left off neutral as a doji day, and then rolled over into Monday, which happened a few hours ago, and we can see prices currently testing those lows. Once it's broken, I'm looking at a 30-minute close below my current sell, which it looks like it'll happen this next hour. Not only are we going to see a signal, we also see an evening star formation happening on this. Now, it's an evening star formation, but it's in a weird position. First of all, we have to wait for this to close to confirm the evening star and the rejection of this resistance right here. But also, we have to zoom out to really see that it's a true evening star. Can't really see it right here because that's a 4-hour. So we do know that there's a lot of space below for price to close down. So we know that there's no support down below. So technically, this is old support becoming new resistance that we're currently seeing being formed right now. So old support is all of this happening. It broke that support. Now it's forming new resistance. When you do look back in the future, when you do look back in the past, what you're going to see is a completed potential pattern that's going to lead into the next support that we can't see until the daily. So I just kind of explained kind of a mind twister, but hopefully those of you that can follow up with me understand what I'm talking about. Now let's get back into the technicals. The evening star formation is forming, creating new resistance, and if we are looking at the 5-minute time frame, we can see that price had rejected with a bearish engulfing after a potential push towards the upside. This is a bull trap right here, because what it did was price went for a drive towards resistance. It broke 5-minute resistance, and price should have continued on up from this area right here. And as you guys can see, it went up, it tapped and activated buy orders, knocked out all retail sellers right here, and now we're currently seeing price move on its way towards the downside. This is a slight pullback, but it's just a scary move for those people that have too much money on the markets and too tight stops. And so I don't really care about these types of movements or fluctuations. It's completely normal in the wave towards the downside. So at the moment, my sell stop got triggered about a couple hours ago. We can see 30 minutes, 1 hour, about an hour and a half ago, my third sell stop got triggered. I actually had a sell carried over from last week. So if we look at the, this is a good time frame. Let's go to 30 minute. Going back to last week's activity, we can see that price was currently bouncing in between highs and lows. There was a consolidating day on October 8th, which was on Friday. So I had entered a sell based off of my price action, and I did have my hard stop slightly above. That's what we have. It was higher up, by the way. This is my new sell stop. I actually am using a trailing stop, but my sell stop loss was right around there, the 0.80 through 85,325. So what I was able to actually do was I was actually able to secure an additional about 20 pips by moving my trailing stop. So now I'm risking 20 pips less than I originally did, only because I know how to trade price action. So not only is it great for the offense, but it's also great for the defensive end because I'm able to foresee any potential moves against me that would be threatening. So that's what is currently going on in the market right now. Let's go back to the 5-minute intraday time frame so we can just kind of currently see where the waves are going and perhaps either enter another trade and continue this on downwards or put a stop loss and move it downwards. Either way works because technically I could move my stop as of now further down, or I could even enter a new trade and have a lower stop. So that's what I'm going to do. I like to do it as I progress. So since this trade just got triggered about an hour and a half ago, that stop loss is fresh and new, and that's my hard stop, 23 pips above, about an hour and a half ago. So now it's London session, and London has to make up its mind whether it wants to break to the upside and validating my moves for the day and also for the week, indicating a potential rally to the upside. We do see that that's where my stop loss is. What does it look like? It looks like there's a potential rally. You know, you can go as far as 70 to 100 pips back to the upside to retest those highs. Worst case scenario. Actually, the worst case scenario would be it breaks these highs and there's a complete reversal, because then we're completely wrong with our bias, and that means that something was going on in my analysis from the beginning. And one bad long-term bias could ruin an entire account and an entire trading plan. So always make sure you're on the right side of the markets and with the trend on the long-term bias. So let's get back to it. If price does break those highs, I do suspect price to continue to drive. See, this is going to be its first point that it's going to reverse from. So if it does break these highs, it's going to look like a pullback around the zone, and then it's going to continue on upwards. It's going to make another hesitation 20 pips higher than that, and a third hesitation 50 pips higher than that. So I do suspect price to break these resistances and make its way potentially all the way up about 80 pips from my stop loss. So by having a tight 23 pip stop, I prevented myself from losing a total of 100 pips. So because of knowing intraday price action, I was actually able to make a reduction of about 80% of my original stop loss of where it would have been on the long term. So that is great to know, and that's something to be able to identify when you're day trading, because not only will that allow me to have to take a bigger loss than I planned, but I also would have to wait, and who knows how long it would take to hit that loss. While I'm sitting in drawdown on this 4-hour time frame waiting for my long-term hard stop to be hit, another thing that could happen is days could pass by. Looking at this, if you were, let's just hypothetically say, if you were bullish right here and you entered another buy long right here back in end of September, it's been almost 2 weeks and you've seen no profit. So if you had your stop loss based off the 4-hour and your stop loss was say down below here, about below September 16th lows, and it correlates. You can see higher low, higher high, higher low, higher high. So stop loss is moved right below there. So you would have had a 24 pip stop, and your risk to reward would have been amazing. Like 23 pip stop for a 120 pip target. That's phenomenal. That's a 10-to-1 reward to risk right there. Well, not 10-to-1. I'm sorry about that. My number's off. 23. That's about 5 to 6-to-1 reward to risk ratio right there. So you would have definitely had a 6-to-1 reward of risk. You should have took some profits. If you were counter trend, whatever your bias was, it was indicating that it's profit taking time. And if you do look at the longer term, like I said in my previous videos, it's bearish overall. So that was strictly an intraday move. So looking back at the 4-hour, if your stop loss finally got hit, think about how long that would have took you for that to get hit. You entered the trade, okay, on the 28th, and it hit those stops on the 5th. So the 28th to the 5th is approximately almost 1 week, literally. It was 1 week. So it took you 1 week for your stop to get hit when you could have been out, You could have been in profit, and if you knew how to read intraday price action, you would have been in profit on the 27th. You would have been in high profits on the 28th, 29th, and then around the 30th is when it would have indicated that price has gone down if you did not close above. So you would have probably lost about 40 pips of profit, but you would have been able to take home the rest, about 80 pips. So you can kind of see how all of this makes sense once you're able to read it, and that's all it really takes. Let's go back to the 5-minute and just look at price action on the 5-minute so I can project my next moves and go on to the next pair. I want to see how well I'm doing on time. I have a lot to talk about, so this might be a lengthy video. It might be up to 20 minutes long, but bear with me. Those of you that are following up with me, watching my videos on a frequent basis, I appreciate you. Continue to watch it, continue to learn. I have a lot of great pointers that most of the world's going to miss out on, so congratulations to you for finding this video and this content. Hopefully it serves you well. Let's get back to my setup. So we have A to B, B, C, C, D. Okay, we know that this is going to be a hard stop above here. So if I wanted to do a sell order, my hard stop would be about 27 pips above, and that would be my hard sell stop. That would save me a discount of approximately, let's do this. I would discount myself an additional 17 pips upon the completion of that order. So what I'm going to do now, since I have full margin, this is the only trade I'm trading on this account. This is my IG account, as you guys see right here. So this is the only trade I'm trading on this account right now. So what I'm going to do is a very obvious move that at this point it's a no-brainer. I'm going to enter another sell stop right below the lows. Because it pulled back, this is a significant area of support that's being tested. So just wait. So when I have my sell stop right before those lows, I'm going to have a stop loss. Well, when we look at it right now, what do we see? A to B, A got breached. That's a disruption. That means there's a potential that it could rally higher and test higher highs before falling down. So if I know that that's a disruption, that could be the move back towards the downside. That's what I see. But I don't want to put my stops right above here, nor right above here, because it looks like a weak area of resistance. So I'm going to put my stop right above break even from my previous order, because if we do look at it from, let me stop the moving chart. We do look at it from a longer term bias, we're going to put it right above Sunday's highs. 5 pips above Sunday's highs will be enough. So right above, so 0.85063 is where I will put that stop loss. Right there. Stop loss is 0.85063. So you see the hard stop is about 36 pips away. It's not much money being lost. Very, very little amount. 123 lunch money. And pretty much that's my risk upon the completion of the new low. Like I said, right now it's a weak resistance, so I don't buy that. Now price technically should continue to move towards the downside, but there was some bullish news for the euro just recently. The only medium impact news of the day for euro actually just got released, and Turkey's also in the European Union as well, so they had medium impact news. But yeah, we see that there was a negative there's a correlation. There's a negative news, okay, lower than expected, and that should have drove euro down, and which it did, and that was earlier, a couple hours ago. So when we did see that negative news, what had happened was it drove price down the 5-minute, and it tapped into my sell, my 0.30 lot, and that's what happened. And then it dragged it up, and then there's a bias change today. A couple hours later, there's Europe, there's Italian, let's see, Italy, and there's medium impact news that was positive, and that's the remainder of the day. So that medium impact news that was positive brought price up to retest that, and looks like price is currently going on up for right now. But we know that it's on an overall downtrend. So what's probably going to happen is, if we're looking at the smaller term time frame, is that price is going to be positive just for the session, and we're going to see price kind of consolidate towards the top, maybe break highs and consolidate in this middle area before breaking lows. But I don't believe it's going to pass by these highs right here, 0.85 highs. So if it does, I'll put an alert there, but I highly doubt that that's going to happen. So at this point, we're going to wait until that does happen. What I can foresee, though, is it's going to exhaust around this resistance that's currently being formed right now. And price is going to make its way back down for the day because it was medium impact news and it barely had an impact on the overall market structure if we look at it from this perspective. It looks like, okay, 30 minutes ago, the news that it got rejected, and this is the current 30 minutes that we're currently being tested. So we need this 30-minute candle to close above, I say, the highs of 0.85. Like I said, it's kind of higher up anyways, but anywhere above 0.849, if there is a solid 30-minute close, not just a spike, but also a close above there, we could potentially see price rise as high as another 10 pips for the day before falling down. If worst case scenario, it will break those 10 pips, go higher, and test the highs of last week. In that case, we would be out because it would not be in a bear trend anymore. Last week's highs was a start of a new bear trend, and therefore, if it does go back to last week's high, that means the trend lost its power. Going back to last week, let's look at last week's highs. 10.7. You guys see that was last week's high. 10.4. So 10.4, 10.5, 10.6, 10.7, 10.4. Let's just go all the way back. 10.1. Okay, so 10.3. This is where it started. So there was highs of last week, and it broke down, created a new support from the previous week, as we can see where the crosshair is. And then that continued to drag the market to create a new pullback and a new drive to the downside, forming a new potential trend. So if market does climb towards the upside, it's going to invalidate that new potential trend, and the move towards the downside that broke that would be the new area of resistance that price would be testing. So I don't want to sit there and wait in that extra 40 pip drawdown, and that's going to waste time, kind of like the example I went over earlier. So we will just be out of the market and just wait for a move back to the downside and focus on another pair if that happens. I don't believe that's going to happen, though, so let's just wait and foresee price make a reversal. I believe it's going to happen any moment now, and I'll follow up with you all at that point. So we do have a risk, a stop loss. We don't have a profit target, so let's sum this up by adding a profit target. It's still going to stay the same. I believe that this is going to be broken. It should be broken today or tomorrow. So if anything, price is going to reverse from highs today if it does get up any higher, and then it's going to drop, create new lows, and then tomorrow should be a continuation drive towards the downside on that pair. I do see news in Europe tomorrow at some point. There we go, Tuesday. So there's Gbp high impact news for one. So that's going to help Euro GBP. And yeah, so there is GBP high impact news tomorrow. I am trading Euro GBP, so I do suspect price to potentially close below. And even if anything, if it's negative GBP news, we're going to see GBP drop. If it's negative GBP news, we're going to see GBP, Euro GBP rise. If it's positive GBP news, we're going to see the momentum shift to the downside. And this is one of the great things about price action reading is we're able to identify moves and ahead of time, and therefore we're able to have a better bias towards the potential release of the next announcements. If I have a bearish bias and my technicals line up on Euro GBP, that also tells me that pairs like GBP JPY, if I have a bullish bias on this, it's going to break out at some point tomorrow. So I might have to just wait the rest of the day before a potential breakout. And that also indicates that the pair that I'm going to go over next, Euro USD, actually is going towards my stop loss. It looks like this pair is probably going to end up going back to the downside. I'll explain that in a moment and what I did. But Euro USD, there we go. And then we also have GBP AUD. So if it is a negative day for GBP, we're going to see GA drop, Euro GBP rise, and everything go against my biases. If it's a positive day for GBP, we should suspect that GJ rises, GA rises, and everything kind of follows suit. So I want to go over this last pair, Euro USD, briefly. It was just a quick trade I took. I didn't really believe in it anyways, but pretty much I have a long-term bullish bias for Euro USD, so I am looking for bull trades. But at the moment, it's currently in a reversal. So it's in a reversal from the long term. So if price does go down any further, which is very soon, but it hasn't hit that low of 1.15006, then we're still going to be bullish. So this is the last resort for bulls on Euro USD. And if the monthly closes bearish, then we're going to see a potential new market shift. So the bias is going to shift. And as we can see, last month it actually closed below the lows. So right now, if you're reading price action alone, you do have a monthly close right below those lows. And that's not, and that indicates that it's going to go down and that you should continue to trade bears. I failed to understand that, and I did not see that ahead of time. So I actually bought it because of my long-term bias, but I failed to look at price action. And these mistakes do happen, and when they do happen, you can either abort the trade and look at the weekly. The weekly closed below, so it's obviously bearish. Sometimes I stick to my long-term bias, and I don't really see what's happening on the longer term before I take the trade, and that's what happened. I took this trade this morning, and I shouldn't have done it so ahead of time. It was in Asia, and that's why we're currently seeing a negative drawdown in this pair, but you see that price literally shifted down. What I'm going to do actually is I'm going to close it out. It's a small loss. It's all good. And I'm going to actually enter some sells. I'm going to show you guys, by the way, it only went down 11 pips, so that's how tight my stops are. And now I'm actually going to enter sell the other way, do a 3 standard. Yeah, pretty much. Let's do it. So I have a 3 standard sell, and my hard stop, it's very obvious from a day trader's point of view where the hard stop is. So for me, I'm going to go over this in a minute. Let me just place a stop loss. My laptop mouse is very bad. I need to get another one. So, okay, right slightly above the high, make it out of picture. So that's where my stop loss is as a day trader. All right, now it's easy for me because as a normal retail trader, if you're shorting this, where's your obvious stop loss? Well, you can put it there, there, or there, but obviously it would be up there. So for me as a day trader, I'm able to identify where's the obvious stop loss. And for me, I can see what I see. My videos, I always constantly talk about price action. So at this point, you all can see that I'm a pure price action trader, and I only use price action. I may use a tool indicator to identify strength and weaknesses and long-term trends, but that's it. This one right here, we have high to low, for example. It's rejection from the 0.618, and succession towards the lows will be my first profit target, which is about 26 pips away, 591 Gbp. I do suspect it to go down further, so what I'm going to do is bring it to its extension for the day, and that is right on the reversal. So 58 pips below this low is actually going to indicate that the market is going to go into a down market for the rest of the year. So what I want to do now is look for a weekly, and I want to look for my weekly potential. So like I said, that's profit taking for sellers that was already above a week ago. But for me, I'm currently just entering the market. So based off of my analysis, I'm actually going to drag price down to where I believe resistance is. I believe price is going to crash down here and test right here. And I do believe price is going to continue going down for Euro USD to test 2020 last year's support. So we're going to sit there, we're going to wait. I think it's going to get down to last year's support, about 500 pips away from my profit target, which is about 300 pips away from my current open, 800 pips from current price. So for the rest of the year, potentially set yourself up for 800 pip drive to the downside on Euro USD. Like I said, I just took a loss. It was nothing to me. I'll make that back. 10 pips from here is actually going to be right here, and that's going to trigger a new bear trend. So you guys see, I get out of my losses very easy, simply small loss, and it happens. And I get into winning trades right away. I showed you guys live in this video. I broke down everything I can. I went over my biases, my whys, and everything happening. And you guys can literally see how I do this live. You see everything is playing out. There's no crazy moves against me or any stupid shit. And hopefully at this point, you guys can see that price action is the way to go. Reading pure price action is literally the wave. And we'll follow up with these pairs midweek. If it closes and hits any of the targets before then I'll update you guys all before midweek. But that's it for today. I hope you took a lot of insight and tips from this video, and it's helped you improve your trading edge a little bit more. That's my goal. All right, everyone. Till next time.